Actually, you're right, it comes down to them, but we don't need to identify them up front. So, we do well with a 98% error rate. As long as we have Pony with 30 other yo-yos in the portfolio, we're okay. And we don't know which of the 30 is Pony Ma, but over time we will know that. So I think it will be, the funny thing is, like, I was in Turkey a few weeks ago, and I've now owned Reysas for 4 years. And something that always puzzled me was they repeatedly enter kind of brand new businesses in which they have no competence. And in a few years, they're number one in the country in that business. So they from a standing start, they go into these areas where they have no expertise. And and I couldn't understand. I said, is everyone else idiots? Like, what's going on here, And I realized, this is the first time when I met the guy, I realized that he's the Energizer Bunny. So he probably gets like 72 hours of work done in 24 hours. And I never saw that trait in the last several meetings and interactions. I mean, I could see it in the numbers that they hardly ever failed, and they were able to enter these things, and they were able to do all that. But I could never really, and what I realized is that Warren has made the same statement about Greg Abel. Recently I think he was talking, and he said, I just see what gets done in a day with Greg, and it would take me like, 3 or 4 days to do those things. So the thing is that my perspective is that I don't think we can tell in advance. I mean, I think very few of us would have the gifts to look at somebody. But I think what you can tell easily is after the fact. And so obviously when we are going into a business, when we're investing in a business, we have to look at the historic trademarks. And we can look at the numbers, we can look at return on invested capital, we can look at a few metrics which would point us to businesses that are likely to be great businesses. I think after that, separating the wheat from the chaff will happen automatically as we only get to know a business after it drops about 40% in our portfolio. That's when you really get to know the business. And so the same thing with the companies we invest in. I think we may have an idea about these businesses, but we really will get to know them far, far better after we've owned them for a few years. So I would say that basically, as much as we might like to try to have a portfolio filled. Now think about a portfolio with Walmart and Amazon and Costco and Tencent all together. Never happened. That might be superhuman capability. We haven't seen that happen with any investor so far. And we've even seen with Warren and Charlie, with incredible temperaments and incredible brain power and really good at the art, still a lot of errors. So I think the best way to answer that is to accept that we'll make the errors, but to really study what we've got. And I can point to many investments I made in the past where the buy decision was exceptional and the sell decision was horrible. And it's happened so many times, and I know it'll keep happening. So I'm trying to, make amends.
Monish Pabrai emphasizes that a portfolio does not need numerous successful stocks. It only takes one exceptional stock to create significant wealth. He believes in concentrating investments in a few high-conviction ideas rather than diversifying excessively. This approach allows investors to benefit substantially when one of their picks perform extraordinarily well. By focusing on quality over quantity, Pabrai aims to maximize returns while managing risk effectively. He also advocates for giving your stocks ample time to perform well, as he believes in power of patience and long-term investing. He believes that quality investments often need time to realize their full potential, so rushing to sell can hinder significant gains.
Like Charlie says, why should it be easy to get rich? But these are difficult. I mean, I agree with you. I think that separating the signal from the noise is not easy. But I would say that you should err on the side of patience. So businesses are going to go through cyclicalities. They're going to go through ups and downs. Some things will work, some things won't work. And so you need enough time to be able to tell that. And yeah, so the risk is we will not be able to sell optimally, but the risk is even greater if you're too trigger happy. Actually, it is not that hard to find great businesses and compounders. And there's a hack you can do to get there. I'm going to give you the hack so you can go straight to the promised land. So the hack is make a list of all the brands that you are a customer of. Okay, so if you eat at McDonald's once in a while, add that to the list. If you go to Chipotle once in a while, add that to the list. If you are buying a certain clothing line, your headphones are a certain brand, you're using certain types of perfume. So look at everything you spend money on, okay? And just make a list, because the thing is that for some company to succeed in getting even a tiny part of your spending is a huge accomplishment, because all of us are very discerning about what we want. We are very particular about, I want to wear certain types of shoes. I want to wear certain types of socks. I want to, buy certain kinds of furniture or buy certain appliances. I'm buying a Samsung phone or an iPhone or whatever. So just make a list of everything you are consuming, right? And then start saying, okay, which of these are listed public companies, right? And now let's understand why. Ask yourself, why did I go to McDonald's? Okay, why didn't I go to, Carl's Jr. or some other brand, like Whataburger or whatever? And then, let's probe into McDonald's and see what kind of business it is. And is it undervalued? Because if you're a consumer of the business, you already know a lot about it. And you don't even need to get to the balance sheets and all that right now. Just basically in your head, what you would ask is, where is this business going? Is it really going to explode? There's a new brand of sneakers On. I saw people wearing On sneakers. I'm not lucky enough to have On sneakers yet, but I read an article that it was really exploding in kind of sales, and for whatever reason, people have an interest in that. So I would just be curious to understand what is going on there, right? And what kind of business is it, and why would it be sustainable or not sustainable, and so on. So I think that if you take that approach, and this, Peter Lynch was a big advocate of this approach, it's going to get you relatively close, because you're going to, and especially what you'll find is sometimes you latch on to brands that are just emerging, before they've really, like college students were the very first demographic to get rid of landlines. Okay, so some of you don't know what I mean by a landline. That's okay, you can be forgiven for that. But when people started disconnecting landlines, the very first demographic that did that was college students. So college students were able to see that landlines are going away. They were probably also the first to disconnect from cable or from satellite TV. Okay, so when the behavior patterns are changing, you sign on to some streaming platform for some content, chances are you guys may be ahead of the curve versus the rest of the crew, right? When Facebook first started, it was only for a few colleges, right? It first started at Harvard and then expanded from there. So basically, those individuals who were early customers of Facebook or consumers of Facebook has a huge advantage, because the rest of the world didn't even know what Facebook is. They never used it. So you're actually at Notre Dame at a huge advantage to Warren in Omaha. Massive advantage, because he's not changing anything about what he's doing, whereas you guys are actually driving change. And so very easy to find a compounder. I gave you the formula now.